Yeah, I'm losing my
The stock bond butterfly spread.
Oh,
we
I like this. Great building blocks.
Oh yeah, baby. We've got, and this is what's nice is that the blocks at the small exchange are so small and standard that you can build them up. It's like Lincoln Logs, baby. It's real easy to build yourself
How do you know about
nice.
Lincoln Logs?
Oh, I
Please.
had Lincoln Logs.
Oh,
Lincoln
you
Logs.
had actually real little buildings when you were like Beverlovia royalty, and you'd have little people move them around. It was like the giant chessboard where they had the 3-foot tall pieces, and you'd have a whole little army of dudes moving.
Well, so I'll do you one better. Yeah, I would have. Mom, bring the butler in. Have him take out that wall, and that would be it. No. We had the Lincoln Logs. Tinker Toys, less standard. The Tinker Toys were weird. That was like someone who was on some illicit drugs put those together. Do you remember the Tinker Toys?
Yeah. I like the Tinker Toys.
They were cool, but it was
you could
like
build more out of them. Although the Lincoln Logs were good too. All good stuff. Legos. I mean, you had to love Legos.
Lego. I was thinking about making the jump back into Legos recently, and then I decided I have too many stupid hobbies. I can't make another one out of Legos, but Legos do look cool. And man, if I was a kid and I could build like the Millennium Falcon with the Legos, or the Harry Potter castle with the Legos, I would be going nuts. But I am a 27-year-old man, and thus we build stock bond butterfly spreads, Pete. We're going at it here today. You and I touched on it a little bit yesterday during a different show. We started creating with our Tinker Toys and our Lincoln Logs here at the Small Exchange. We were looking at the different yield products and the different stock products, and I wanted to go even deeper on it here today and create what I think is a pretty interesting trade. But at the end of the day, what's really nice is we're giving you all the Tinker Toys, and we're giving you instructions, but you can go off the reservation and make whatever contraption you want. So it's going to be a fun time. But Pete, let me ask you this to start. What's better than one price extreme?
I would always say two. Again, what's better than one bottle of vodka? What's better than one little of your microgreen pods you grow? Two. So
I don't grow microgreens yet, but I do want to get into that for sure.
So absolutely, two price extremes are always better than one.
Absolutely. And so to start here, I wanted to take the stock market, the SM75, that as we speak is, sorry to go back and forth there, my finger slipped, that is making another price extreme as stocks continue higher here. And yes, the only thing that is better, Pete, for guys like you and me is appending another market that is highly correlated, but has not.
I'm so glad you mentioned that. Yeah.
It hasn't moved in that same direction because to me, and this isn't a perfect relationship here, Pete, but when you have highly correlated markets like stocks and bond yields, and here we're starting out with the 2-year, the shortest term yield product, when you put them together and you can create something that's similar to the outright market itself, but has a second angle on it, that's only increasing my confidence and increasing, hopefully at the end of the day, my probability of success. And we put numbers on this in the past. I don't have any numbers for you right now, but we have shown that pairs trading, spread trading in general, does create a better reversion trade than the outrights themselves. I mean, you love this, right? You feel a lot better about putting two markets together for a relationship as opposed to what we hate is just going, stocks are expensive, sell them. This is a lot better, right?
Absolutely. And I think it's a tradable opportunity. Whether or not you have an opinion on stocks, that's one opinion. What you want to do is diversify your ideas. One of the great ways to do that is build strategies within. Not everybody's a master of all 6 asset classes. And I think, I dabble in them all. I'm certainly not a master of some of them by any stretch of the imagination. So you're going to find asset classes, whether that be rates or equities or the dollar, that resonate with your trading style, your risk tolerance, and your mechanics. So when you can develop different strategies within those, that is a true level of diversification and increases your number of occurrences, all things we try to accomplish. So absolutely. And just looking in that, Frankie, if you go back, the eyeball on the back and forth there, that's what we look for. We look for something with movement, an extreme and back and forth. And this is certainly setting that up.
And what you're seeing here is a similar upside in the SM75 here, an upward trend.
Right.
What you have against it now is the S2Y, which is a highly positively correlated market to the stock market historically, going back several years. The 2-year yield should be moving higher with the stock market when you're talking about economics or just price data from the last several years here. And we're not seeing it. We're actually seeing the stock market similar to its outright self here. We're seeing it continuing to climb uninhibited by any upside being seen in the 2-year. Now, Pete, I will throw a third character into the ring here and make you cough by throwing in the S10Y. And here's where things get interesting because we got the stocks on the board, all-time highs in the stock market that we're seeing here. Okay, so a price extreme there. We've got the 2-year not seeing that upside that we've seen. As you can see, in the chart that we're looking at, pretty much unchanged for the last couple of months. Now, what we're also seeing is the 10-year yield, another yield product, climbing higher as well. That 10-year is back to highs unseen since before the pandemic. And so now you've got 3 things in play. And before modeling a trade here, do I dare bring a 4th character here into the story? Because I think what we're going to end up having here is 3 pieces of the yield curve and the equity market. Because what you've seen, Pete, is that 30-year, while it has climbed similar to the 10-year, it has actually not climbed nearly as much as historically it has. It's still stuck around 2% in the 30-year, while the 10-year is almost getting near 2%. And so you see that upside, but not by as much. And that 2-year is still stuck at 0. Team that with an all-time high in the stock market, Pete, and I'm looking at a 4-way stock bond pairs trade butterfly spread, whereby I'm short the stock market, I'm long that short-term yield that is still stuck at 0 for a whole gang of reasons.
Sure.
And then I'm selling a couple of those 10s, both against the yields and against the 30-year yields as well, which I'm adding some longs in there as well. So this is, once again, I'm putting all the tinker toys in front of you, and you at the end of the day can create your different ratios, or if you only want a 3-way trade or you want to get back down to just, I think the stock and bond pairs trade on its own, the long 2-year short stock, I think that's a fine trade. You can make it out for yourself. But Pete, what do you think about this? Because we essentially have the 1x2x1 yield curve butterfly, long 1 2-year, short 2 10s, long 1 30-year. And then
which we've done before, right? That's your traditional yield curve butterfly in the world of smalls, right?
Absolutely. And then we got an extra long 30-year and then 2 long 2 years because that's a smaller product. And that is against the short stock market trade as well. I love having this on here because, we talked about probabilities, Pete, and it's pretty simple math to let you know that if I sold the stock market, I got pretty much a 50-50 shot that I'm right or wrong. But if I add 4 markets together here, there is, a near 0% chance that all of them move in my favor, all of them move against me. So you've created, yes, maybe a slower moving trade, but it's a hedged one that I think is more intriguing than just, flipping the coin on the stock market itself.